Today we are going to look at the differences between sole proprietorship versus incorporation. First, let's compare the cost of the two options. Under a sole proprietorship, there is no cost if you're running your business under your name. But if you're going to register under a different name, then there is a fee for it. Now, if you're going to incorporate your business, there are costs associated with incorporating your business. Under sole proprietorship, you still only file one tax return by filing T2125 form in your T1 personal tax return. For your corporation, you need to file a separate tax return, which is a T2 corporation income tax return. Usually, for a sole proprietor, the costs are lower than filing a T2 corporation tax return, and vice versa. Usually, the costs for filing your T2 returns are higher than filing your personal tax returns. Lastly, you may need to hire an accountant or a bookkeeper, which will add to your costs. And similarly, for your corporation, you may need to hire a bookkeeper or an accountant. Now, let's look at other factors between the two options. With a sole proprietorship, you have unlimited liability, but with incorporation, you have limited liability. With a sole proprietorship, you're taxed at your personal tax rate. Tax rates of a corporation are usually lower than your personal tax rates, especially if your business is considered a CCPC, a Canadian-controlled private corporation. There are limited opportunities for tax planning with a sole proprietorship, but there are tax planning opportunities available with a corporation, such as tax deferral, income splitting, changes to corporate structures, or setting up trusts. Income earned under a sole proprietorship is treated as salary, and any losses can be offset against other income. Compare that to a corporation where you can take money out of your corporation in a form of salary or dividends. Your sole proprietorship can only have the calendar year end, which means your year end will be December 31st. But with a corporation, you have flexibility to pick your own year end dates. With a sole proprietorship, there is potentially less paperwork involved, but with a corporation, there's usually more paperwork involved, such as updating your minute books, corporate bylaws, shareholder registry, directors registry, and so on. And if you sell your small business corporation in the future, you will get $800,000 in lifetime capital gains exemption. Now let's look at what you need to do as far as the CRA is concerned, the Canada Revenue Agency. With the sole proprietorship, you don't need to register for a business account with the CRA, but you need to register your corporation with the CRA for a business account number. Sole proprietorship does not need to be registered for a payroll account number unless you have employees. Your corporation needs to be registered for a payroll account number even if you're the only one. Your sole proprietorship needs to be registered for HST, and same thing applies with your corporation. Now, in the end, let's look at your tax filing needs. Under your sole proprietorship, the deadline to file your tax return is June 15th of every year. But deadline to pay your taxes is still April 30th. And April 30th is still the deadline to pay any HST to the CRA. Now for your corporation, the deadline to file your tax return is 6 months after the year end, but the deadline to pay your corporate taxes is 3 months after the fiscal year end. And HST filing and payment deadlines vary based on filing periods. So that's it for today, folks. I'm your CPA CA, so feel free to ask any questions. Until next time.